and welcome to this very special interview. Joining me today is Mahendra Jaju, who's the Chief Investment Officer Fixed Income at Mirae Asset, one of India's fastest growing mutual fund houses. Thanks very much, Mahendra, for joining me in these difficult times. Mahendra, banking and PSU funds have, become very, very popular debt funds of late, and there's a lot of commentary around, the reason why investors should consider them. Apart from the fact that these are government-owned, most of them, but as far as banks are concerned, there could be private banks as well. Could you explain this category and why has it become so popular of late?
So, in the last 2 years or so, we have seen a massive destruction of the wealth because of the multiple credit defaults in the economy in general, and many of them have also impacted the debt mutual funds. So, what investors have possibly realized after all these events have happened is that one, there is very good, there is a good challenge in understanding which credit is good, which credit is not good, because we have seen even the AAA companies default. In case of ILFS, for instance, or DHFL, which was a AAA company at one point in time, not very long ago. So I think one challenge that investors faced is how to distinguish between a good company and bad company. And then there were a lot of complicated debt instruments like structured products or products where the labeling was not indicative of the true nature of the underlying company's business or its financial condition. Therefore, I think there is a good amount of safety in going with a strong ownership, because a strong ownership generally implies two things: better corporate governance practice, and most importantly, inability to bring in fresh capital in case of an external or internal challenge. And therefore, the banking and PSU fund has found good support, partly because the assessment of the credit quality of the portfolio has been very challenging, partly because of lack of adequate information, partly because of lack of adequate education and awareness within the investors and the distribution community, and finally because of the structured products where the labeling does not give you good idea about the actual strength of the company. Therefore, and finally, when the investors come to a product, they expect good return, because the banking PSU funds also have the ability to manage the duration in line with the interest rates trajectory. They have also performed very well. So that category has found a good traction, and we think that that's an excellent product, because you get the safety of the investments, and you also have the ability to generate potentially good return. This product by the construct can eliminate the gaps between what the investors understand and where they are likely to get caught on the wrong foot. Now, let me just also make the point very clear that even in the PSU and banking debt fund, up to 20% can be invested in the non-banking or non-PSU papers. So the investors need to be very careful, because even that 20% can potentially damage, or take away 2-3 years return if something goes wrong.
It's been a pleasure talking to you, Mahendra Jaju. Thank you very much, and wish you all the very best. Hope you continue to serve Indian investors equally well in the future as well. Thank you very much.
Thank you, Vivek. Thank you so much for inviting, and thank you so much once again.
Absolutely. Thank you very much, Mahendra.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.